Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have Rajan, Managing Partner at Investcorp Corsair, Alex Dewar, Managing Partner and Director at BCG, as well as Jonathan Roumel, Chief Strategy and Growth Officer of Honeywell Energy and Sustainability Solutions. We're here to discuss the factors intensifying investments in upgrading, building out U.S. infrastructure and long-term solutions. It's great to have the three of you with us. Welcome to Trade Talk, certainly a topic that's garnering a lot of attention. Hari, let's kick this off and understand the macro factors that are driving U.S. infrastructure investment.
Absolutely. Thanks, Jill. It's great to be here and also with the other panelists. I think the overarching theme is one of a severe underallocation of capital to many subsectors of infrastructure, and in particular, that which we invest in, which is transportation. And that has led to, quite an observable and significant degradation in the quality of our domestic transportation networks here in the United States across air, sea, and surface, our airports, our rail infrastructure, our shipping infrastructure. And the disconnect between the quality of that infrastructure and what our economy and our population sort of needs and deserves and can justify is quite pronounced. And that's creating a really interesting opportunity set today from an infrastructure investing perspective for private capital to step in and close that gap and bring domestic transportation, certainly here in the United States, to the level that it deserves to be at.
Yeah. And Alex, it's interesting because it's almost as if this investment in recognition of how critical our infrastructure is tends to be more reactive than proactive. And of course, the shifting demand with the energy landscape is a catalyst behind this.
Absolutely. I would say in many ways, the energy sector is very reactive in nature, given that we haven't seen the demand signals for investment in new power generation growth, as well as transmission and distribution infrastructure to the scale that we're seeing now in many decades. We're seeing power load grow at 3% or more per year, whereas for decades that's been flat in the US. And so this, of course, is driven by predominantly by the growth in data centers and AI, but it's not exclusively that. It's vehicle and building electrification, it's growing industrial and manufacturing base in the US. And all of those factors are really coming together now. And I think many across the political landscape, as well as the business and investor landscapes, are now waking up to the tremendous opportunities to deploy capital and generate return on that capital, given by the trends that are shaping really dramatic and unprecedented power growth in particular.
Yeah. And Jonathan, let's expand upon this theme of data centers and automation. Of course, that is really driving the demand here as well.
Exactly. We see, as Alex mentioned, energy demand is only going to continue to increase. And so it's critical importance for customers and industrial companies to be able to drive the margins that they need to reach in terms of meeting this demand growth. And so there's a significant amount of data that's out there. And with Honeywell, we've been working with customers on providing digital and software solutions that will help to optimize existing infrastructure as well as help to grow new infrastructure. And this is critical to meet this demand because it's going to take a combination of both. And there's significant data out there, but it needs to be unlocked to drive deeper insights to improve performance. And so we're looking at paths using technology and innovation and new technologies to help to unlock further productivity from this infrastructure. And so that includes measures of efficiency to drive further output and yield and performance from existing assets, improve reliability, and then more importantly, it's really making sure we're optimizing and enhancing the capabilities of the workforce to get more out of the existing workforce.
Yeah, and Jonathan, it's interesting because when you think about connected controls and autonomous systems and so forth, and making infrastructure or existing infrastructure more sustainable in terms of resiliency and long-termism, as well as adapting, because these technologies are only going to evolve.
Exactly. And like, we'll go back to efficiency, the efficiency point there that I made. So this is really the quickest and most effective way to extend the life of existing assets and improve new assets in low carbon energy type areas. And so with the deployment of connected controls, with the deployment of advanced automation, AI and operations, and eventually autonomy, this is going to drive the efficiency. So let's say we increase efficiency through a bunch of measures. that drive 5% yield improvement for a facility. You look at a portfolio of 20 similar assets, whatever that may be, whether it's a refinery, natural gas processing plant, or some fuels generation facility, that effectively equates to one incremental unit. So this yield improvement, it prevents the need from putting new steel in the ground. As Hari was saying, for capital to raise for new infrastructure, it helps to eliminate that challenge. And so there's a range of ways to be able to leverage this technology to drive growth and help to meet the demand.
Yeah. And Alex, another way to think about sustainability, of course, is investing in climate-ready infrastructure solutions as well.
That's right. We see the growth in power load for data centers being fulfilled by multiple sources here. Clear today is that wind, solar, and battery storage, the scaling of those technologies is driving a majority of that load growth now. That was over 90% of capacity addition in the US in the last year. But beyond that, natural gas is poised to see several gigawatts more in the coming years and many more beyond that. And furthermore, the current increase in data center load is driving emerging opportunities for a range of low carbon technologies that are less mature today, but have a path forward, especially in the next 5-year horizon or so. That includes nuclear. We've seen several gigawatts now of nuclear capacity deals done. That includes other technologies like geothermal with carbon capture, which can be deployed on natural gas. Purchase agreements and joint development agreements have been done in all of those areas. And of course, building on what Jonathan said, a wider range of technologies on demand response or grid enhancing technologies as well. So it really runs the full gamut, and this growth opportunity presents a tremendous range of applications for deployment of more emerging low carbon tech.
Yeah. Hari, how critical are public-private partnerships, especially as we think about executing on this at scale?
Yeah, no, I think partnerships between private capital and public authorities is going to be critical and really the driving force behind the revitalization and regeneration of a lot of these facilities on the transportation side. I mean, we all know it's a multi-$100 billion need, fiscal deficits at the state and local level, which is where most of our transportation infrastructure is owned and controlled today. Fiscal priorities are such that there has to be a role for private capital. And what's very important for public sector decision makers who are often making kind of the first call to privatize a critical infrastructure asset in favor of private sector operations and capital is that operational capability. It's not just the availability of capital. It's not just the financial sponsorship. It's knowing that the private sector party that you are partnering with actually has the operational capability, the wherewithal to improve the proposition for the ultimate constituency, which is the traveling public and providers of goods and services.
Well, Hari, let's expand upon that for a moment here. What does operational expertise look like with that sector? What does the operational workforce look like in terms of skill set, or either one of those available?
Yeah, and look, I mean, we have the challenge in certainly the United States of not really having had significant private sector infrastructure ownership. So the human capital pools have really been developed in certain concentrated areas across these different types of facilities. And it's really a question of the private sector mobilizing to get the right skill sets and historical experience in private sector operation and management of these facilities. So obviously we have, capabilities that we can draw from different sectors, whether it's the transportation service providers themselves, whether it's the airlines, the rail companies, the trucking companies, and also drawing from operational expertise and also from the public sector. These facilities, there's a lot of good talent, in the public sector, but that needs to be redeployed in the context of public-private partnerships, and these facilities being run with a return on capital motivation in mind. Yeah.
And Alex, somewhat operational expertise adjacent, when we think about policy for a moment here and balancing the near-term and longer-term goals as it relates to what we could do to operate facilities now, right? And then thinking about, alternative forms of energy. How is that policy lens being balanced?
Yeah, Jill, it's really a balancing act between the federal policy and I think a bit of whipsawing that we've seen on energy policy in prior administrations and states. And ultimately, actually, state policy matters a lot, and maybe arguably more in some ways than federal policy does in terms of where and how energy assets are developed and built and deployed and what those commercial models are around it. We are still seeing the vast majority of growth in power load come through utilities. And these are utilities in many states that are regulated where there is not just an obligation to provide power, but to manage for affordability and manage a range of social and community objectives around that. And so I think in some ways, actually, the consistency of that state policy and navigating those environments at a state level, especially through utilities, that has provided for a fair bit of continuity overall on this. And yes, there have been changes in tax policy. Yes, there are some challenges to navigate, if you will, going back and forth in different permitting regimes between different administrations. But I think by and large, our power sector being so state and market, by that I mean ISOs and RTOs for those that are experienced in the space dependent, provides a lot of stability, continuity, and a platform to build off of going forward. Now, not to say there aren't challenges in navigating it, but I think there's a tremendous amount of experience that's being brought to bear in advancing technologies and commercial models in this new environment of load growth.
Yeah. And Jonathan, let's tie this all together here because you noted that the technology exists right now. So how is Honeywell working with customers to help them unlock this operational intelligence?
This is a great point because ultimately the greatest technology may be there, but if the customers aren't able to deploy it effectively, you're missing out on the value it creates. So we've been working very closely with our customers in this shift towards advanced automation, deploying AI and driving towards autonomy in a way where customers typically have to piece a lot of different things together to drive this efficiency. So they'd have to get the deep technology expertise on the process technology. They'd have to work with an automation partner. They have to work with a software partner. So where we're really working with our customers is integrating all of this into a single ecosystem, which allows all these disparate parts and pieces of whatever part of that industrial value chain may be to talk with each other. That's critical because that's going to drive much more efficiency in terms of the performance of those assets. It's going to drive increased yield, but also for new technologies, as we talked about, and the bankability this is going to help drive down the cost to produce or the cost to capture carbon or whatever that may be for emerging technology. So valuable for existing infrastructure where we can drive more performance and yield, but for new infrastructure and in particular new technologies trying to meet this demand, the combination of all this under the same ecosystem, working with our customers to deploy that for fit for purpose use for them is really going to help to unlock this value. Right now, it's just there are too many different stakeholders and it's tough for the customers to be able to capture this.
Yeah, Jonathan, I think there's a great point that you bring up, especially as it relates to AI. It seems as if there's so many areas within the company internally that are competing for resources for AI and trying to rationalize all these use cases. We understand the efficiencies exist, but truly, where are you unlocking that value and being cognizant of not remaining in silos where it's effective across the entire organization? I wouldn't even say that's just specific to the infrastructure conversation that we're having, but I think across multiple industries as we figure out where the value fit is going to be as it relates to emerging technologies such as AI.
Yeah, and I think you're spot on. There's so many different ways that this can enhance a company's performance and within an organization. I'll go back to one of the point on the enhanced workforce because this is relevant across multiple industries. And we talked earlier about there are different pockets of labor. We need to train up skills and capabilities, but every industrial company has a potential risk of there's a lot of institutional knowledge. There are very few people who know how to operate certain things that are at a certain level of performance. But this is where AI and this data and automation can really help to enhance the workforce by taking decades of operational data combined with knowledge of how they all work together. And again, this is where piecing it together. Now you can create a roadmap and a playbook for an operator. So an operator who has 5 years experience can operate a facility at the level of somebody that has 20 plus years experience. Beneficial on multiple fronts because it It ensures consistent level of performance. It identifies that next layer of insight that somebody who has a lot more experience may see, but then it also de-risks it for the operator, and that eventually this knowledge will retire. This knowledge will go on to something else. And so how can you ensure that the next generation of operators, employees have the right level of capabilities to continuously improve upon the performance of that asset? And that's where AI can really help to enable things beyond just the operation itself. It's enabling the workforce.
Yeah. And Hari, I would add on, in addition to public-private partnerships, the key role that research and development plays as it relates to the academia space, right? There's more aptitude there to share data and resources and findings and so forth. So I think that's another part of that equation as you look at multiple players to execute on what's, pretty outsizable goals there. So when you think about short-termism and long-termism, how would you prioritize what's next for infrastructure investment and how to measure those goals?
Well, I mean, like coming back to AI, right? I mean, if you look at the application of AI to transportation infrastructure, one of the things that we're really excited about is the impact that it can have on the quality of the user experience, right? So we talk about the significance for kind of the workforce, but also for the user, right? The ultimate constituency. We think about passengers traveling through an airport or a rail station, and all the different touch points that they have. How outdated that is, and the opportunity to rebuild and regenerate our infrastructure at a time when digital technology and the application of AI to the manner in which users interact with their critical transportation infrastructure, that's tremendous, because there are so many pain points in that process that can be addressed. So that does create an imperative for kind of an R&D component to what is frankly a fairly traditional long-standing industry, which is the movement of goods and services and people around goods and people around the world and around the country. That's where we think that R&D component is really important in terms of the application of these technologies for some pretty long-standing and traditional modes of transportation.
Yeah. And Alex, to wrap up here, I'll ask the same question of you, but in a different way, in terms of where you're seeing long-term growth potential as it relates to modernizing energy systems, making them cleaner, and being able to scale them.
Absolutely. So first and foremost, in the energy sector, it's all about the capital deployment, and that's at a project or asset level. It's within the supply chains as well, and we're seeing continued sustained market growth across a range of products and infrastructure related and equipment related sectors overall. But it's I think, to build on the last conversation, it's also in the AI space as well. Jonathan identified many use cases. Beyond that, I think we're seeing tremendous use cases of AI around the development and deployment of more emerging low carbon technologies, the integration of different energy resources into the grid and maximizing the use of the grid resource that we have, and on the supply chain for it, whether it's factory automation, whether it's deployment and management of inventories for this rapid build out. That's the other very vast, I'd say, set of use cases that are only now emerging, and I think we'll have a sustained growth opportunity going forward as this build out and infrastructure development and energy continues into the 2030s.
All right. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.
Thank you, Jill.